Hi guys, this is day 18 of the 42-day revision challenge, and today we are doing government policies to redistribute income. So when we look at government policies to redistribute income, we're looking at two things. One is what we call transfer payments, and the second one is what we call direct taxes. We believe direct taxes and transfer payments are two means to redistribute income in a society. When you look at transfer payments are basically payments which are made to provide financial support to people. While direct taxes, we know, are taxes on income, wealth, and profits. I'm going to talk about direct taxes a little later. I'm just going to focus on transfer payments right now. When we look at transfer payments and these payments that are made to people, they can be either in terms of like cash benefits, or they could be what we call benefits in kind. What are cash benefits? Well, cash benefits are payments such as like income support. Example of this could be income support. It could be sometimes some countries give child benefit. If you have a child, sometimes you're given a benefit in terms of payment so that the child may not go through any undue stress because of lack of means. Or it could be also sometimes in terms of incapacity benefit when you are unable to work and so on. But these, when you look at cash benefits, they're designed to protect families in certain circumstances where the income otherwise may be very low. Like for example, when you have a circumstance of a child being born in a family, this is where you need that support because your income is very low. So these benefits are designed to protect people in some circumstances where otherwise income will be very low to support. The benefits in kind are basically those benefits such as like your health benefits or your education benefit that is given by the government, because they want to make sure that they provide everyone an equal chance in a society. These benefits, they accrue to individual households depending on the number of people and their age and gender. So for example, if you have a lot of young members in a household, you will have a lot more people taking advantage of the education benefits. So there could be cash benefits or benefits in kind. Now, when we talk about benefits, we also talk about benefits can be, let me write this, can be either means tested, or they can be what we call universal. Means tested benefits are those that are paid when income falls below a certain level. If my income is at a particular level and then it falls, I may qualify for what we call a means tested benefits, because let's say my income was like 2,000 rupees and suddenly it falls to 1,000, and government may believe that 1,000 is too low, so it could be a means tested because your income has fallen below a particular level. On the other hand, universal benefits are those benefits which are paid to all. Let me write this: paid to all regardless of income. So if you get a benefit that is regardless of income, you will be basically getting what we call a universal benefit. For example, education is a universal benefit. Regardless of income, people can take advantage of that. Or health in many countries is a universal benefit, which is given to anyone in the economy, irrespective of whatever income they're getting. One of the benefits that we want to talk about in detail is basically our unemployment benefits. When you look at unemployment benefits, these are the benefits which are paid to people who are unemployed and are out of work. And while this benefit is an important benefit for a lot of people who lose their job, we have conflicting views about whether this benefit should be paid or not. Some economists believe that if these payments or unemployment benefits are too high, then they may have what we call a distorting effect, or a disincentive, as we call it, a disincentive to work. Because if the unemployment benefit is too high, people in the labor market may not decide to sort of work, because they may believe that the cost of taking up a job will be too high if the unemployment benefits are too comfortable. So one of the things that we want to look at is basically what's the right level of unemployment benefits that should be given in an economy. Let's move on to now talk about taxes. When we look at taxes, taxes of course are both direct taxes and indirect taxes. While we know what indirect taxes are in an earlier discussion, today we want to focus on only on direct taxes. Direct taxes can be progressive, proportional, or regressive in nature. Progressive tax is a tax where when the income, Y for income, when the income goes up, the tax rate also goes up. So for example, if my income is $20,000, I'm paying, let's say, 15%, but if my income goes to, let's say, $25,000, if my tax rate goes up to, let's say, from 15% to 20%, this means that I am paying what we call a progressive tax. Proportional tax rate basically means that if the income go up, the tax rate doesn't change. So you can say this, that the tax rate remains, for example, irrespective of whatever people's income is, tax rate may remain as, for example, T for tax rate, 20% flat. Lastly, when you look at regressive tax rate, a regressive tax rate is where when the income go up, your tax rate actually fall. This is very rarely to be seen when it comes to direct taxes, but there could be a possibility where a government says that, when people have higher income, they will pay low taxes or low tax rate. So if I want to sort of draw a diagram for income and tax rate, so on my x-axis I have income, on my y-axis I have tax rate, it seems to be the case that progressive taxes, income go up, the tax rate go up. So line will be like this. This is my progressive tax rate. For my proportional tax rate, we have a line like this. This is my proportional. Irrespective of what your income is, the tax rate is not changing, while your regressive tax rate may look like this. When the income go up, the tax rate actually fall. In the context of now income redistribution, we can argue this, that when the tax is progressive in nature, it actually helps in redistributing income, because when the income go up, when our incomes are going up and our tax rate is also sort of going up, this means the rich are paying a higher tax amount than the poor, which would mean the progressive nature of a tax can ensure that income distribution can become much more fairer in a society. So one of the problems we saw of direct taxes is this, that they can be what we call a disincentive effect, as we were talking about. If there's a disincentive effect for the really poor people who are working and getting very low sort of income, and they are paying a tax, how can we help this situation? And the answer is this, that we can sometimes do what we call tax credit. What is tax credit? Well, basically tax credit is sometimes called the negative income tax, where people are actually, rather than be charged taxes, are paid money for the fact that they are working and not taking advantage of the unemployment benefits. So if unemployment benefits are there and people are still working, they can be given tax bracket, which provides an incentive for people to sometimes work. One thing we need to be careful about is the fact that when we look at regressive taxes are basically those where when my income go up, my tax rate goes down. We normally think of indirect taxes to be regressive in nature. Write this. So indirect taxes are regressive in nature. And because of the fact that indirect taxes are regressive in nature, we also argue this that they may not be good as a policy measure when it comes to distribution of income. Next up, we want to discuss something called canons of taxation. Canons of taxation or principles of taxation are basically those principles or those canons which can make our taxes to be good taxes. So one principle that can make our tax to be a good tax is basically the principle of equity or fairness. What do we mean by this? Well, simply the burden of the taxation should take into account the ability of people to pay the tax. For example, if you have a rich person, he should pay higher tax. If you have a poor person, he should pay lower tax, or even the tax rate should be lower, which simply means basically if you want taxes to be good, they should be progressive in nature. So first principle that makes tax to be a good tax is equity of fairness, and that's basically the rich should be paying more taxes and the poor should be paying less taxes. The second sort of principle that we want to talk about is called certainty or transparency. This basically means that information about taxation needs to be made available in such a way that it is clear and transparent. So there should not be any hidden costs when it comes to taxation. People should know exactly what they are supposed to pay, how much is their tax liability, and when they are supposed to pay as well. So there should be a complete certainty about it. There should not be any surprises when it comes to people that suddenly my tax liability goes up when I was expecting something else. Third important canons of taxation is basically called convenience. Convenience simply means that the payment and collection of taxes need to be as convenient as possible. They should be collected, for example, at a time and in a way which makes it very convenient for the taxpayer. So, for example, if I'm a taxpayer, the best time to charge taxes or take taxes from me or take tax payment from me can be the beginning of the month when I get the salary, not the end of the month when I don't have the salary. So the idea goes this, that you need to make sure that you make it really convenient for people to pay taxes. Sometimes one way the government can ask taxpayers to pay could be through online sort of taxes, and that's a very convenient way to sort of pay taxes. So convenience is a third factor which makes the tax a good tax. The fourth one is basically called the cost. If the cost of sort of administering and collecting taxes is too much, like if the government has a huge machinery, then basically the benefits that we get in terms of tax revenue will actually end up being spent in terms of collecting the taxes. So the cost of administering and collecting taxes need to be as low as possible. Taxes should not be expensive to collect and should not basically discourage businesses because it's extremely expensive to just to collect taxes. It should be collected in a very low cost manner so that most of the benefit can go in terms of government spending it on public and merit goods. The last one when we talk about canons of taxation has to do with efficiency. Efficiency is simply the idea that taxation should not lead to any disincentives. We've been talking about how taxation can result in a disincentive effect because if the tax is too high, I may decide not to work, and that's why we may need to make sure that it should not be so high or should not be so progressive that it ends up causing people to not work. Another sort of concept that is related to this discussion, where we want to sort of move on, is called poverty trap. So what is poverty trap? Poverty trap is a situation in which, let me write this, it's a situation in which an individual has no incentive to take a job because any additional income will be taken away in taxes and loss benefits, thus leaving them worse off. So if I'm on a very low income, right, and I have two choices, right? One point is that I could just not work and just get the unemployment benefits, and second option is I take up a job and start earning. But when I take up a job and start earning, I will lose some benefits. So there will be some benefits that will be lost. At the same time, I will be paying some taxes as well because now I'm working. So if that is the case, then I may decide sometimes to not work. And if I don't work because my unemployment benefits are more comfortable than my after-tax and loss benefit adjusted income, then there is what we call a disincentive effect. So disincentive in terms of people deciding rather than working, they decide not to work. And that can be a big sort of problem for the government. It's a tricky dilemma because on the one hand, it wants to protect the poor and provide a safety net for those who cannot earn enough. But on the other hand, it also wants to provide good incentive for people to basically work. And where benefits are working alongside with taxes, we need to find the right balance. One way to avoid a poverty trap, as we've discussed earlier, is basically to give what we call tax credits. The tax credits or the negative sort of income tax can provide benefit to the low income people who otherwise will decide to not take a job because the unemployment benefits are comfortable.